Hi, what a difference a few days make. For the last three clips, in the teeth of much market turmoil, I urged you not to be a lemming and not to sell. Why? Because the fear and greed index, also known as the panic and euphoria indicator, indicated a historic panicked extreme due to Trump's tariffs. Panics like that, I said, are a mark of a market bottom. The S&P then was at 49.50. And what do you know? A few days ago, President Trump modified his tariffs, the panic melted, and the market zoomed off the bottom. Will it keep zooming? Maybe not straight up. There'll likely be some aftershock first, but then, in my opinion, it'll likely be up, up and away. For how long? Before year end, I think, certainly before the US midterms in November, the market will likely be much higher. How much higher? You know my view. I think we'll see 7,500 on the S&P before year end, up 50% from the panic bottom. But when the market gets there, it'll likely stabilize and then start falling all the way to 1,500, down 80% in a deflationary crash. Now, how and why do I arrive at both these extreme forecasts? Look up my previous clips for details based on chats with my most trusty Washington informers and some sleuthing of my own. But in brief, here are the most important 5 reasons for the above forecasts. Reason 1. Extreme panic like the one you just saw and still seeing always turn into extreme euphoria. Therefore, in my view, the historic panic level of 3 out of 100 at the S&P's bottom is likely to be matched in a mirror fashion with the euphoric level of 90, and vice versa. Remember 2019? Just pre-COVID? The market peak pre-COVID had a fear and greed index of euphoric 90, which was matched within 3 months with a panic meter of 8 in the COVID crash bottom. Look it up. Reason 2. Due to the recent and ongoing panic, there's a ton of cash on the sidelines, both in the hands of institutional managers of other people's money, also known as OPM runners, who all panic together, as they usually do, and also in the hands of retail investors who sold together because, well, they are lemmings. These heaps of ready cash will become rocket fuel for the market as all these lemmings, private and public, spend it all to catch up with the market as it begins to rise. Reason 3. US Treasury Secretary Bessent is driving long interest rate down to force OPM runners to buy bonds, to take off his hands the bonds created by previous Secretary Janet Yellen before she departed. So I betcha that in May, the Fed would likely be forced to match the decline in bond rates and cut its rates too. This fall in rates, in my opinion, should add to the market rocket fuel, cheaper money. Reason 4. The November midterm congressional elections required market to be up, both to raise money for the members up for re-election and so that the voters would want to keep their current representatives. If Trump loses Congress, he loses his ability to legislate his program. Even now, Democrats are slow walking his ambassador nominees. Susie Wiles, Trump's canny chief of staff, will see to it that the same operators who pushed the market down here to trap China with the tariffs will likely push the market up. Because, come on, you didn't really think that big market move like this one happened all by themselves, did you? Reason 5. There will likely be a big relief rally once the big tariff deals are starting to be cut. And such rallies would likely transform into a market melt-up as China inevitably surrenders also. Now, why would it surrender? Because even now, there are thousands of small and medium manufacturers in China closing factories and letting workers go. If China's unemployment skyrockets, she can be toast. All in all, as I said, I can see the market zooming this year to 7,500, perhaps a shade more, based both on the cash in the hands of the lemmings and the OPM runners and the QRA, the Treasury's quarterly refinancing announcement, which both my informers and I read religiously. So that'll be the run to the peak. But at the peak, in my opinion, the market would likely flatten and start falling. Yes, I know, this too seems an offbeat forecast, but in my opinion, it's not really. Why? That's because Trump's tariffs, as I explained before, are really a tribute being levied on the world's economy by the US empire, like Rome used to do to conquered nations. These tariffs are really a forced transfer of a portion of the world's GDP to the US GDP. The whole world is going to have less GDP, the US will have more. How best to imagine it? Well, imagine the US is the world Cosa Nostra, ruled by Donald Trump, where every business in the neighborhood has to pay a tribute, also known as pizzo. But the Cosa Nostra has gotten into lots of debt, and the easiest way for it to get out of that is to demand a raise in the pizzo. To make sure everyone complies, Donald Trump first says he'll double the pizzo, then renegotiate with those first to come and beg mercy. Of course, all will come, because they have no option but to comply. All except China, that is. But this might cave in too, in my opinion, as per the above, once everybody else already had. The effect of doubling the pizzo would be to make Donald Trump wealthier, but everyone else in the world poorer, much poorer. Therefore, when the economy finally crumbles, as it must, in my opinion, the effect will be more severe. Hence my forecast of 80% plunge in the stock market. How will it start? I of course cannot tell, but I think Europe will probably be the first to go, with car factories going bust and individual nations breaking away from the EU to deal privately with the US, as Italy has just done. What's the conclusion? For now, I would resist strongly the urge to sell and not be a lemming. Wait for the fear and greed index of low single digits to slowly climb to middle two digits and finally into peak euphoria, probably just before the November midterms. It'll be the opposite play of 2019 and 2020. When this peak comes, the best action would likely be to be one among the first lemmings, contrary to those still selling now, who in my opinion are among the last ones. But let me remind you, although I have a high conviction in the above scenario, I could of course be wrong. That's all for now. Please let me know in the comment below what you think of the above, and if you like it, subscribe to the channel and forward to all your subscribers and friends who they're subscribed to, and buy my books, The Sleuth Investor and The Advanced Sleuth Investor, and if you like them, give them a review on Amazon, which I hope will be a good one. I'll see you next time, and meantime, thank you very much for watching.